What's up everyone, it's Scotty with MoneyVest. So in this video, we are going to be talking about Apple and Tesla. There's lots to unpack because there were some concerns, of course, over Warren Buffett's 13F filing from last quarter of 23 and him selling about 1% of his Apple stake. We're also going to talk a little bit about Tesla because this is quite concerning from the fact that Tesla may actually end up losing money in 2024. There's some expectations. I actually mentioned this in one of my previous videos. I briefly talked about it that I hope that Tesla doesn't actually turn the corner in such a way that it actually starts losing money because of the compression in both operating and gross margins. So we've got that to discuss because there was another analyst that mentioned that Tesla actually will lose money and they cut their price earnings per share target by 25%, even though Jay Ives continues to be optimistic with a $300+ price target on Tesla. So hope you all enjoyed this video and find it helpful. And I've also got some very insane and crazy analysis on Tesla's cost basis and of course Apple's cost basis as well. Because we look at this data on Webull and they kind of what they do is they compile all this data based on the transactions that have happened, and then they try to extrapolate what percentage of shares are currently up or down on a certain stock. And that's exactly what we're going to discuss here. And it's quite crazy for both Apple and Tesla. So hope you all enjoyed this video and find it helpful. Make sure that you drop a like and don't forget to subscribe to the channel if you're just joining us for the first time. Again, links to our Discord and Patreon is going to be down below if you're interested in joining. And of course, getting access to all the members only private videos. I would love for you to join and of course, get us feedback on the moneyvest.com website, which is going to be launching very soon. You do also get access to all the members only private videos, including all the trade alerts, and also do connect with me on Instagram. My handle is going to be CASWRP as well. So profited shares at market close. So this right here is Webull's profited shares at market close. Now this shows proportion of the free floating shares, okay? This shows the proportion of the free floating shares held by investors which were purchased at cost prices lower than the closing prices, meaning profitable, and profited shares at market close equals profited shares divided by the free floating shares, and that gives you a percentage. And the reason why I'm showing you this is because this is actually quite insane. If you come take a look at Apple, only 1.6% of the current float is actually profitable. And that's after Apple has seen about a 14 to 15% sell-off here. So you can see the amount of red that there is. I mean, there's a lot of investors out there who picked up a lot of shares at higher prices. And now since Apple has dropped over 14-15%, a very, very small percentage of people, only 1.6%, so less than 2% of shares are currently profitable according to Webull. Now, I'm not going to fully take this data and believe it 100% because I believe this is just too complicated to calculate it in such a simple way, but it kind of still gives you some idea, some sense of how that average, price per the average volume by price dynamics work, and of course how majority of people, investors, have kind of picked up a lot of shares in the 180s, 190s, closer to all-time highs when we saw significant increases in price, and of course right now we're seeing only 1.6% total profited shares for Apple. Tesla is no different. Again, it is down a little bit over 40-50%, of course, from its all-time highs, a little bit more than that actually, and the total profited shares are sitting at just under 6% right now. So a very, very small minority of investors are actually green on a Tesla at the moment right now. So in particular, talking about Apple now, in particular filing, the conglomerate offloaded about 10 million shares of Apple in the fourth quarter of Warren Buffett. We talked about this yesterday in our video, owning about 905 million shares still. So he's still Apple's biggest stockholder, non-ETF stockholder, and also Berkshire still has Apple as their biggest position. Nonetheless, the move sparked broader concerns among investors who are worried about what will happen to Apple's sentiment and its stock price if Buffett, one of the company's loudest proponents, is trimming down his massive stake. Now, one of the things that I want to mention here is that every time if you go into a transaction, right, whatever transaction it is, remember this rule of thumb. If you are buying something, you genuinely believe that thing that you're buying, whatever item, whether it's real estate or stocks or even a car, whatever you're buying, you believe that item has value. It has potential, okay? It has potential, it has value, it will potentially appreciate, you will make money, whatever the case might be. But if you are a buyer in any transaction, if you're buying, you believe that it has value and it has potential. That is not the same if you are a seller. Remember that. I had to learn this over time, but that is very true. Just because somebody is selling something does not mean that it does not have value or potential, okay? So that is something to always remember. It does not work both ways. A buyer, if you are buying, there's only one reason, that buyer believes that it has potential, it has value. But as a seller, selling something doesn't mean that he or she believes that it does not have value or potential. It could be because of a million different reasons, right? It could be because of a lot of different reasons. It could be many reasons, right? So always remember that. Just like how I mentioned before, that an insider selling stock doesn't mean that they have lost faith in the company and they believe the company is dead, right? They could be selling for a million different reasons. They could be, there could be tax obligations. There could be some options expiring. There could be raising some cash for, a home that they might be buying, right? Whatever the case might be. That doesn't mean that they've lost faith in the company. They don't think the company is worth investing in anymore. But if you're a buyer, you're buying to make money, right? You're buying to make profit. And that's the difference that I wanted to mention in this video, kind of give you a little bit more clarity. And just because Warren Buffett is selling doesn't mean that he's lost faith in Apple, right? He could just be trimming his stake to raise more cash for another acquisition that he might be doing, right? It could be multiple different reasons, right? So we have to give him the benefit of the doubt as a buyer and a seller, as I already explained. Now, moving forward, so this right here, Dan Ives still believes Apple has potential, and he said that this is a quote-unquote golden buying opportunity on Apple after it's down 8%. And he said, citing flat iPhone units, strong services growth, and upcoming innovation in AI as reasons for optimism with a price target of $250 per share. That's actually quite a reasonable target. It's going to represent about a 25 to 30% potential upside on Apple, considering that it's trading in the almost 160s. Actually might be more than that, closer to 40% upside still for Apple, and quote-unquote a golden buying opportunity. Now, this right here is the China weekly smartphone unit sales shares and growth in the first 6 weeks of 2024 versus 2023. We have seen a decline in almost all providers except for Honor and Huawei, seeing a 64% growth, bumping it to the 17% spot in terms of market share, just next to Vivo at over 18% in China, 16% Honor, and Apple's been knocked down to about the 4th spot. It was actually much higher in last year. It was a 2nd spot. And, Apple was 19%, 2nd spot. Look at Huawei. Huawei was only 9%. So that increase in the market share in China for Huawei has just been insane. I mean, it's increased 8 percentage points from 9 to 17%. And that, of course, is causing a lot of concerns over in China for sales for Apple. Now, this right here, coming over to Tesla, switching gears here. Tesla Bull says that this could be the year that EV giant actually loses money. And Morgan Stanley, Tesla Bull Adam Jonas issued an investor note late Tuesday in which he cut his Tesla 2024 earnings projections by 25%, saying that the EV giant could potentially lose money this year. Of course, meanwhile, Cathie Wood is buying more Tesla shares. Now, when it comes to losing money, I mean, margins are going to be very important. So if Tesla continues on this rampant price cuts, that obviously is going to affect the overall margins. And it's possible that we do see, some break-even quarters here this year, potentially even lost quarters, but this is really going to be some kitchen sink year 2024 if interest rates don't come down fast enough and Tesla is not able to keep that pricing power, because the resale value of Teslas is absolutely horrendous. I mean, somebody's buying $90,000 vehicles a couple of years ago, and now the resale value is closer to 30, 40,000, especially when you consider that it's used, it's going to be even lower. So prices have dropped like 60, 70% in such a short span of time. And again, Tesla is having to deal with a lot of that margin compression. So I'm really, really concerned that Tesla does not actually turn into a loss-making company, because if it does, it's really going to change the narrative. It's really going to switch up the story, and it's not going to be great news. So that is something to keep in mind. This is a concern. I'm only here to bring out the concern for you. And he did cut the price target on Tesla down to $320. That's down from $345, but maintain an overweight rating on the shares. So it's really important for us to keep a close eye on margins and operating leverage and how Tesla continues to potentially keep that pricing power and once again start reaccelerating back up from a growth perspective. So support level is going to stay put at close to $174, $175. Resistance is going to be all the way up to $200, $202, $203 per share. So a little bit of this downtrending channel of lower highs and lower lows. So it continues to, again, of course, sell off here. And like I said, support level is going to stay put at 174 here, all the way down to 150s. My fair value is in the 150s for Tesla. Apple, 165 is going to be that support. I honestly wouldn't mind starting a position or adding more to my position here in the 165 for Apple. From a a swing trading perspective. From a investment perspective, I'd be looking at lower prices, lower levels in the 150s and 140s. So again, the cheaper the better. We're always looking for deals. We're always hunting for deals. And so support level is going to stay put at 165 for Apple. Lower the better. And for a swing trading opportunity, 165 still makes a lot of sense for this company considering how oversold it is at the moment. So hope you all enjoyed this video. Let me know your thoughts down in the comment section below. Do connect with me on Instagram. My handle is going to be CastWRP. And do join our Patreon and our Discord for members-only private videos. Excel spreadsheet, Discord access, everything is going to be available with the link down below. We'd love to have you on board. And as always, happy investing, and I'll see you all in the next video.